Good morning. Welcome to Almus Market Morning. Geopolitics has taken center stage after a day of calmness on Wednesday. Nervous traveling prevailed throughout yesterday, with the ball set rolling in Asian session. Claims and counterclaims of attacks by both Russian and Ukrainian sides were heard, but eventually markets seem to have concluded that this is going to be a long-term issue. With weekend coming up, safe havens were in demand and risk assets were seeing a poor demand. However, today again, there has been some positive news that US representative is ready to meet the Russian counterpart next week. This has led to another U-turn in the currencies and risk assets, but a small one, as markets remain skeptical in view of the weekend. Fed officials, on the other hand, continue to keep the debate alive about how fast they need to move on the rates. Mester indicated that Fed needs to hike rates, but the extent of it and more particularly the balance sheet reduction should be based on evolving data. On the other hand, Bullard continues to stress on rate hikes of at least 1% by July, and even said that raising rates would not be risking a recession. Of course, for now, at least the markets are more inclined to buy bonds as safe haven and as a shift from risk assets. Currencies have been surprisingly calm, and much of it is due to probably the central banks monitoring volatility. Gold stole this limelight by rising as much as 3% in last two trading sessions and by a hefty 6.5% in the last 2 weeks. Clearly, investors have found it a better place to park their money, with both bonds and stocks looking unattractive due to tightening financial conditions. The next target to clear for the yellow metal is 1912. Yen too has strengthened as it remains highly oversold, but looks difficult for it to cross 114 on the downside. Rupee traded in narrow range yesterday with a touch of nervousness that started right at the start of the session. But PSU bank activities were seen on both sides, clearly an intention of the central bank to contain volatility. FI sales in Indian equities has resumed after a brief lull. Outflows on account of their selling this month alone is around 2.5 billion, while for the calendar year, we have already seen nearly 7 billion of outflows. Consistent oil importer demand has been met with moderate export sales, anticipating some strength in the INR as we head into the final weeks of the financial year and possibly flows related to LSE IPO. Range for today, I expect between 75 and 75.25, with an eye on the news from the Eastern Europe and Fed member speaks. Thank you. Have a nice weekend.
Thanks, KK. Brent crude oil is likely to post lower close this week, first time in last 8 weeks than the previous closes, unless it closes higher than 94.50 today evening. Asian currencies are flat today morning and may look for a Russia-Ukraine standoff for further moves. Jayaram sir has already covered this, but I would also like to cover that globally investors are looking for places to hide in this kind of uncertain scenario. When both bond and stock prices are falling, are we seeing rally in gold due to that? Looks like. Support for gold prices now shifted to 1860 to 1870 range, which was earlier around 8030 to 8040 range. Iron India 10-year GSEC yield unchanged at 668 and probably consolidated today in range of 665, 670. Another data fact, RBI has now net long forward positions as on 31st December is 49 billion USD. Out of this, 67 billion is long and 19 billion is short. There are lots of short positions will unwind during this next financial year. As stated earlier, crypto assets are facing challenges in this uncertain scenario of geopolitical tensions and expectations of higher interest rates. Bitcoin is down 8% to $40,700 per unit in last 24 hours. Norway is leading gold medal tally with 14 golds in the Beijing Winter Olympics, which is concluding on this Sunday. Thank you. Have a nice day.